All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Real quick here, just a second. I want to talk about we're coming up to some local resistance right now, a golden pocket and our one-to-one trend-based Fibonacci extinction around $63,500. And I am going to be watching this for a potential rejection because this move down that we saw, the rejection from the POC, looks a bit impulsive with increasing volume. And if we do see this sort of three-wave corrective move and reject from around the VWAP and this golden pocket, we could see a bigger dump to the downside. So I just wanted to make you guys aware of that right now because we are pumping up to that zone right at the moment. And if we zoom out on some of the higher time frames, we are seeing some bearish signals on the chart. And today's daily candle close is going to be really, really hyper important depending on if we break and close below the value area low of the range or if we close back inside the range after bouncing from our support box that I laid out to you guys on Monday. And if you remember on Monday's live stream, we talked about how a lot of people were watching that golden pocket in this zone up here. If you take a golden pocket from 62.2 up to 65.4, a lot of people were looking at this original golden pocket where we did see some sort of reaction on Tuesday from that golden pocket. But my level of interest was actually the value area low along with the 786. And if we pull that volume profile back to Tuesday, you can see that the value area low was at the start of the box. The 786 was the end of the box. And this was the zone that I was looking to actually hit that value area low and maybe even wick below it to hit our 786. So we are finally hitting support. We do have some bull divs, but unfortunately our local bull divs are getting invalidated. As we were coming down here, lower lows in the price action, we had some bull divs on the chart. And then in yesterday's video, I talked about how if we could make a lower low pretty much immediately, we would see some nice bull divs continuing. But we saw kind of a corrective push up to backtest our point of control. And we saw another rejection, another sort of double top, guys. These double tops and double bottoms on Bitcoin are getting pretty regular. Double top here, sort of double top right in here, double bottom here, right? And so we're seeing kind of a lot of those semi-equal double tops. But the fact that we rejected again and saw a harsh move down to break through the POC, this move up that we're seeing right now could be a corrective move up. We do have some 1 hour bull divs on NAMI. You can see lower lows in the price action, higher lows in the momentum waves. Market Cipher does not have bull divs, but money flow looks decent. And if we zoom out to really like the 4 hour chart, that is where things get a bit hectic for the bulls. If we look at this, and let me go ahead and hide our local setup here. On the 4 hour chart, the 4 hour bull divs are still intact and technically now making another lower low today. We do have 1, 2, 3 lower lows on the chart within kind of this selling exhaustion channel. We have some higher lows coming in, but our money flow is just crossing into the red, and this is in jeopardy of being blown out, having that momentum wave being blown out and invalidating those bear divs. As far as NAMI goes, we had the triple drive of bull divs, but once again, we have some potential invalidation coming if we continue to dump to the downside. So welcome in, guys. I just wanted to lay that out real quick. Let me zoom into the 15-minute chart while I check the chat here. We are hitting our VWAP for the day, and we are coming up to that one-to-one trend-based Fibonacci extinction. So if we're looking at sort of a simple ABC zigzag correction, we would look for a rejection from that golden pocket and then continuation down. And if we do see a rejection from this golden pocket and start to lose the value area low again, I think we're coming for 62.2. We're going to come grab that liquidity there. There's nothing really in this zone that is going to keep us from pushing down pretty aggressively. And then, of course, we might front run our resistance because the VWAP that we're seeing right now be potentially a resistance, an intraday volume-based resistance. So welcome in, everybody. Thank you so much for being here. I do want to let you guys know I have a pretty bad storm going on. I don't know if you guys can hear the lightning and the thunder in the background. Yesterday, we had some major power outages from the storms that are coming through, and earlier today as well. So if we go dark in the middle of the stream, that's why, guys. And I will try to start it back up, but no promises there. Some of these power outages have been lasting a while. So Ryan Henson, good afternoon to you. Darksby 19, Dancer 01, R Pink, much love to you. Thank you guys all for being here. R Pink, thank you for modding for me. Crypto Wander 5813, thank you for modding for me as well. Jojo, good evening to you. And let's see here. Lil Rich 69, Peoria Beat. Eric, thank you guys. Sudeep, much love to you. Thank you for being here. And thank you for modding. Travi Trades, shalom to you as well, my brother. Good to see you in here, Travi. Boomdog Say, no. And Alex, welcome in, you guys. Thank you all for being here. So Bitcoin is at a major decision point. We know that we've been studying really two ranges. We have, first of all, our larger sideways range that we've been in for about 5 or 6 weeks now. So I want to zoom out here. Actually, before I zoom out, let me set an alert on this 618. So if we come up and touch it, we can zoom in and be ready for a trade if we get that presented to us. I do like the way volume is pushing up a little bit right here. This is nice. But remember, 3-wave corrective moves generally end with a C wave on a high amount of volume. So we have to be aware of that. And we can zoom in on the 5-minute in just a bit here. But first I want to zoom out and I want to talk about really what we're looking at here. The two important ranges that we've been talking about. Obviously, we have our bigger sideways range that goes back to the beginning of June. This is the bigger range, and this is really what Bitcoin could be forming some accumulation for the ending of the bear market in this range. There's a real possibility of that happening, especially with weekly bullish divergences on the chart. But within that bigger range, we have kind of a smaller upper range that is developed for over a month now. And we rejected from the value area high of that range. We tried to bounce from the POC of that range, only to reject from our anchored VWAP, which is a key bearish trending anchored VWAP. After losing it and bearishly backtesting it and rejected, we fell to the value area low. Now, we are attempting to see the value area low hold. And let me just hide this so we can get that alert out of the way. But you can see we're attempting to hold the value area low. But again, yesterday, come up to anchored VWAP, another rejection, which means another bearish sign that the bears are in control because we're flipping support levels, which flipped into support earlier in the week or late last week, are now flipping into resistance this week. And then, of course, after losing the anchored VWAP or rejecting from the anchored VWAP yesterday, we're now twice within the last 24 hours bearishly backtesting our POC, and it does keep rejecting us. And that is a bearish sign. We're seeing sell-offs at the fair value of Bitcoin. So over the past 5 weeks or so, 63,000 or pretty much 63,900 to 64,000 is considered the fair value for Bitcoin. And we are seeing sell-offs once we reach fair value. Now, today, what's going to be super important is if we do close our daily candle below the value area low of this range, then it is likely that we do eventually migrate our way down to the value area low of our bigger 2.5 month long range. And I will turn that range on right now. That is this previous big range that I just showed you here. And you can see the value area low has raised up a little bit. It's a little bit above our liquidity at 61,250, and it's a little bit above our golden pocket. But if it's also the same point of control as our 1 month long range. So the fact that we're flipping this point of control bearishly today, and if we start to close today's daily candle below the value area low of this range, we could see a pretty aggressive move down to the value area low of our bigger range. And it would also continue this overall bearish price action that we're seeing on the charts. And we could, I'm not saying this is going to happen yet, but we could dump to 57, take out the lows at 57.7 pretty aggressively. I am still looking for longs around 61K. I posted in the Telegram earlier today that I was going to take a long if we reclaimed the value area low of the range, but I actually have not taken a long position because I looked at the risk to reward ratio. So let me zoom in here on the 15-minute. Because of the potential rejection that we're about to see at the 1-to-1 in our golden pocket, I wanted to be aware that at least my first TP1, I wanted it to be a 2-to-1 risk to reward ratio. So once we started to reclaim the value area low, we could have looked for long. Now, I wouldn't put my stop below today's low. I would put it below that higher low that was coming in just an hour or so ago. And then my TP1 would be around that golden pocket 1-to-1. Well, you can see that's only a 1.62 risk to reward ratio. Now, the overall bigger TP would be taking out the double top, our local double top highs from yesterday and earlier today. And that does make that long trade worth it. But with the real potential of the rejection from this golden pocket and 1-to-1, I did not feel comfortable taking that risk. And I'm even thinking about looking for a short if we do see a rejection and some low time frame bear divs here, looking for a short to bring that down to $62,200 and leaving some of it open to bring down to $61,000. The reason why I'm now a little bit more bearishly biased right now, if we zoom out onto the 4-hour chart. So first of all, yesterday I showed you guys this in the video. As we were making that high yesterday and rejecting from that anchored VWAP yesterday, right here, sorry, yesterday, we did print 4-hour hidden bearish divergence on the chart. And a hidden bearish divergence is a continuation pattern. And the big bearish engulfing candle that came in afterwards, a big volume imbalance candle to the downside, meaning the bears are still in control and the bears are still flipping what used to be support now into resistance. Another reason why, if we zoom out onto the 8-hour time frame, which is really important to look at for money flow, you can see that our money flow on NAMI is still heavily crossing into the red and draining out, and Market Cipher is about to flip back into the red, roll over and about to flip back into the red, and our momentum wave looks like it's starting to blow out here as well. So we would not have some bull divs. And if our 8-hour momentum wave really blows out, then that is going to mean that we have some real potential for that 4-hour bullish divergence that's forming to be invalidated with a blowout here. And our 4-hour money flow on Market Cipher, by the way, is just crossing back into the red here. And it looks like this could get ugly if we start to lose this value area low. Now, we haven't even closed a 4-hour candle below the value area low, but the second we start to close 4-hour candles below the value area low, it's going to look pretty dire here for the bulls. 4-hour on NAMI is also leaving again, coming out, and then zooming out onto the daily really quickly here on that daily time frame. The money flow. So we had some really nice bull divs from our 59K lows to our 57.7K lows. We had some really nice daily bullish divergences on Market Cipher, and we had multiple drives of regional bull divs and local bull divs on NAMI and money flow bull divs. So this is the prime setup that I like to look for those nice bigger positions, or pretty much a guaranteed trade to at least get a TP1. And we almost in some ways wasted that push up. I wouldn't say it was a waste because we did get a push from 57 to 67. So we got a $10,000 move to the upside. But the fact that we rejected from our anchored VWAP from 82.8K, we rejected that anchored VWAP, and we are now seeing that momentum wave top out, and money flow is starting to curve down on Market Cipher after a bearish trigger wave and a rejection from 65.4. And then NAMI is just crossing into the red yesterday. And if we do close another red candle, that money flow is going to continue to drain out here. And with our momentum wave, we have now invalidated any sort of another drive of a local drive of bullish divergence on NAMI. And so all indications look like we could see this bigger dump coming in. But once again, it's all going to depend on today's daily candle close. And if we can hold this local support zone right now with the value area low and the 786, then there is a real chance that we could see a move up and take out the double top highs, actually the double top highs from this week around the anchored VWAP, around 64,500. And we could even look at taking out the highs from Sunday, which is a weekend high. So weekend highs, weekend lows. We know that we're trading kind of in this squished zone in here. And we are going to see a big move soon from this, guys. This range is starting to get developed here, where it's unlikely that we continue to go sideways for another week or so. So I think we're going to see that move soon. If we look at our VWAP bands, and these are very similar. You can look at these are VWAP bands, but they're very similar to Bollinger Bands. When they squeeze together like this, you generally will see a big move. And that big move expands those bands again. It gives the volatility cools off a little bit. But when they start squeezing together like this again, eventually within 24, 48 hours after they're really squeezed together, you generally see a big move coming. So it's looking like they're trying to squeeze together again. And I am expecting some sort of big move in the next couple of days. And of course, the move is more likely to be to the downside because overall from our 67K highs, we are seeing bearish market structure. All right, let me check the chat here. Welcome in, everybody. Let me know, is sound okay and everything? Is the storm bothering you guys? Same here. Storm's moving and the connection is going crap. Well, our pink, well, thank you for being here, even though it's storming there. Much love to you, my man. All right. Pump Fund and Turbo. Yeah, Boomdock say, John, we'll check out some of those altcoins in just a bit. Earlier today, we did get that RSR alert trigger, and the RSR was taking out some range lows into a golden pocket, and we did get the confirmed swing failure pattern with a 15-minute candle close above those lows. So we can go into RSR in a bit, but I'd let you guys know that there's a possible long trade there as well on RSR. Travi, you're looking at a 3-wave retrace here. Yep, I think that is on the lower time frames, and I think that was what I just covered here. That potential 3-wave retrace, backtesting the VWAP, backtesting your golden pocket area, and if we do reject, you're expecting to take out your local lows. So yeah, it's a real possibility here. And also on the 15-minute time frame, NAMI did not have any. Actually, it did. Market Cipher is showing 15-minute bull divs, and NAMI showing more regional bull divs, but they're very slight, and also some money flow bull divs. It's a bit of a mixed signals right now. There is real potential. If we get above our local golden pocket and our 1-to-1 retracement here, there is real potential of seeing a bigger move up, because we do have those 4-hour bull divs that are still not invalidated yet. And if we see Market Cipher and NAMI seeing a triple drive of bull divs into our value area low support and actually hitting that 786, that is when we could see a bigger push to the upside, and really a push to take out the double top highs from this week at 64,500-ish. All right. Yeah, Alex, software probably is going kind of crazy. Check W-Day. We'll check some of those altcoins in just a bit here. Okay, please do hit the like button, guys. If you do get any sort of insight into the market from this live stream, please do hit the like button, subscribe to the channel, and share the videos. And really, we're in scalp mode right now because Bitcoin is just continuing to consolidate sideways overall within this last month. So we're looking at, as traders, we don't have to know what the price of Bitcoin is going to do. We don't have to know if it's going to go up. We don't have to know if it's going to go down. We just have to know where our regions of interest for trades are. And then once we get to those regions of interest, if we see proper confirmation to enter a trade, you enter the trade. That is why when we came up to this was our most big confluence region of interest of resistance. We saw the 4-hour bear divs as we were coming up into this, and that's why we looked for the short from this value area high liquidity grab at 65,360. Now we are coming into our first major local support level, being the value area low of that range, along with the 786 Fibonacci. And you do have some potential 4-hour bull divs coming into this, and there's the potential for longs. Okay, so we have, within the range, we have our major zones of interest. But even if you zoom in even further, we have liquidity levels within sideways ranges. Liquidity levels are really important to be looking at. And if we now pull our new golden pocket from the highs at 65.4 down to today's new lows, you can see that golden pocket coming in, golden pocket retracement coming in at this week's highs, at Tuesday's highs and Wednesday's highs. It is coming right into that golden pocket around $64,500. And I would be interested now in, if we get the SFP, because remember, liquidity grabs into golden pockets are always a prime setup to look at. If we do get that push up and see that liquidity grab into the golden pocket and start to lose the golden pocket, I now am going to be interested in potentially taking a short from this zone as well to bring down, and I would bring that down to 62.2K. All right. Dr. Rex, what's up, man? Welcome in. Thank you for tuning in from Belgium. Not quicker. Hope you guys stay in the clear. Heard about the same bad weather and tornadoes in some parts of the U.S. Yeah, thank you. Not quicker. We're really just having some pretty bad thunderstorms here. No tornadoes or any like major weather like that. But thank you, man. I appreciate that, and hope you stay safe wherever you're at as well. So, bro, even after so many data release like FOMC in a non-farm payroll, CPI, PPI, market is still in the range and hasn't moved a lot. Can't recall when something like this happened. What's your view? Well, so as far as all that news that was going on, the FOMC was a nothing burger, right? Because they just kept rates paused. The non-farm payroll, I actually didn't look into that too much. I think non-farm payroll came in bearishly. CPI was as predicted, and so was PPI. So it's not a big, they're nothing burgers. And that's why the range is not, or the market's not really moving, because it's already been priced in. We know a lot of those data readings that come out are already priced in ahead of time. It's only when there's a shock in the data that we see the market move. So the fact that we're not seeing a shock, that we're seeing it kind of as predicted, that's why I don't think we've seen any major volatility. Now, man, another thing to talk about, guys, is on the weekly time frame. We kind of are also wasting in some ways. Let me go to a different chart real quick here. We are wasting in some ways that nice weekly bullish divergence that we've seen, because you saw here lower lows in the price action on Bitcoin coming into some major support levels, higher lows on the momentum waves. That's creating that weekly bullish divergences. But now the bulls had a chance to keep the money flow coming in and to kind of keep that money flow coming up. But we're seeing now the sell-offs within this sideways range. We're seeing this consolidate sideways. And let's imagine this was a lower time frame, guys. Like, let's imagine this was a 1 hour time frame. When you see the bottom of a pitchfork or the bottom of a channel like this, and you come down and you see an initial bounce, a little bit of a bounce, but you can't even break market structure bearish or bullishly, and then you start to consolidate sideways, that is a bearish move. And what ends up happening is you end up breaking it down pretty aggressively. And so the fact that we could not even break above 67.3, we almost did, but we didn't. And then we've been moving sideways for a few weeks now, not really seeing a breakout, a bullish breakout of this range. It is a bit concerning for me as a bull in Bitcoin. And if we look at our money flow does look like, and our momentum wave does look like it wants to roll over again here. As far as NAMI goes, if we pull up that on the weekly time frame, you can see the money flow is now curved back into the red and is heavily leaving on the weekly time frame. So if we close another weekly candle red, that is not going to be a good sign for Bitcoin. And we really don't want to start to lose our local support or our pitchfork levels. And if we go back to the Coinbase chart, we have the bearish pitchfork. If we start to lose the bottom of this bearish pitchfork, it's also the midline of a multi-cycle pitchfork. That is when we can see that big aggressive flush to the downside. Let me go ahead and throw that, not that one. Where'd he go? Okay, not this. Sorry, guys. Let me grab it here. Right there. So very important support that we're at right now with multiple pitchforks here. It's also your anchored VWAP. But the fact that we're really not able to break above anything here is very concerning for me. I know that this looks like a mess right in here. Let's clean that up. So yeah, and I would also say, if we're looking at this move, this sideways move, really the move from 57.7, so, you know, a few weeks of movement up followed by a few weeks of sideways, as we've been moving up from this level, volume has been decreasing on the charts, which is a sign of a corrective move. And I do not like to see that sign of a corrective move. Now, when we got the low at 57.7, we did see the signal we wanted to, because our 59K lows had higher volume than our 57.7K lows. So you're making lower lows on lower volume, meaning that could be the end of an impulse down, which we were also looking at that being the end of an impulse down. But the fact that we are continuing to push up and sideways, but volume is decreasing here, is not a good sign overall on the higher time frames. And it does mean that we could see a real rejection and breakdown here. All right, let's go back to the lower time frames. Yeah, we're definitely finding some resistance right now at that VWAP, and the VWAP is a volume-based trend resistance. So a daily VWAP, if you're looking at kind of the day trading and the scalp trading that goes on a lot with Bitcoin, Generally, if you're seeing a bearish move through the day and you get a corrective move up to that VWAP and it rejects, you are expecting to continue the bearish trend, meaning you're expecting to take out that low that the corrective move started from. And this is kind of our major test throughout the day today. If we're looking at seeing either bearish continuation throughout the rest of the day and into tomorrow, or if we're looking at, kind of getting a little bit bullish here, then we want to flip that VWAP to support locally. And then in that case, we could work on taking out our local double top around 64K and then our local double top around $64,500. Okay, Jose, welcome in, man. Thank you for being here. Seaman, hi from the Netherlands. Well, thank you. Welcome in from the Netherlands, my man. Peoria Beat, you got in along from the August low. Let's see, where was that August low at? Oh, nice, from 62.2. Okay, you got in along from 62.2. Very cool. I mean, if you're in that long position, hopefully you took some profit when we got up to our major resistance zone, because that was definitely an area to take some profit, knowing that we could get the rejection from our major confluence of resistance. Now, if you start to lose your 786, it's highly probable that you are going to take out those lows. So I don't know what your trading strategy and plan has been on that, but hopefully you did take some profit on that long position. Of course, none of this is financial advice, and I'm not a financial advisor, but that's awesome, man. Have you taken near short that you were talking about before? I'm in a near short, but it was a scalp short that is still open, and we can cover near in just a second. I'll talk about that. I'm still looking for near to come down to around 150. And then, but near did break some market structure bullishly just, I think it was yesterday or the day before. So I'll let you guys know about near. I took a short once we lost those highs. We can also go over hype in just a bit as well. Just baking close. We are good down here. Just baking. Someone close the thing over, please. Yeah, I mean, it has been pretty hot here as well. I mean, it's been hot around the country, let's be real. But where we're at on the West Coast, we do get monsoon season, and so monsoons can be pretty aggressive. Could you review your silver and if the 4-hour VWAP could act as support for continuation blessings? Yeah, we'll check silver, we'll check hype, we'll check near. We'll check the other ones. How does CVD and order flow look? That's a great question. Let's go into our CVD and order flow right now. Let me zoom out first to the 15-minute chart. We'll cover the 15-minute order flow and see the dump that we got from today. So first off, one thing that we can say about today's move to the downside, it is a majority of that move is a long squeeze to the downside. So you can see we saw actually longs coming in right here. Long positions were stepping in, and those were fresh long positions that were stepping in. So we always see people long towards local resistance. Like I still don't get it, but you want to long towards the bottom of a move or a local retracement of the move. But we had some longs trapped up in this local area here. And then of course, when we get the rejection from the anchored VWAP, we trap those longs underwater, and then they get stopped out or liquidated. And that's why we're seeing this drop in open interest. You're seeing the CVD. What is CVD again, guys? It's market shorts or market longs. So if CVD is going down, that means shorts are coming into the market, and it's market orders, not limit orders. It's the aggressive market participants. So we're seeing shorts come in, but we know those are not new short positions. We know that it's longs getting stopped out because your open interest is going down. And that means that positions are closing out. So if we saw new short positions coming in, you would see your open interest going up here. So the move down so far is not the biggest concern yet, because just like with any squeeze, whether that's a short squeeze or a long squeeze, you generally will see nice new money step in, new positions step in, and that is a healthy move to the upside. But if we do now come up to this VWAP and golden pocket area, and then we see new shorts coming in, that is when we could see now the bears in full control, because they would be continuing the squeeze. As of right now, locally, yeah, we're not seeing too much as far as divergences here. So let me zoom into the 5-minute. We can check out this move to the upside that we've been seeing for the past hour. Yeah, nothing too aggressive here. If we were going to see bullish CVD divergences, you would want to see higher lows in the price action, which we are seeing, and you would want to see lower lows in the CVD, meaning that shorts are coming in, but they're not successfully able to break market structure bearishly. And that means that you could be seeing a absorption, a whale absorbing those short orders, but we're not seeing that. We are seeing open interest increase here after the low from today, after hitting that 786 Fibonacci, but our CVD is relatively flat. It's going up a little bit, so we're seeing some longs come in, but it's nothing special right now, guys. Really, it's probably just some people, you know, kind of taking profit. You can see a little bit of sideways and down price, not order flow, open interest in here. So nothing too aggressive. What we do want to see, once again, what we do want to see when we're coming up to that golden pocket, let's pull that golden pocket real quick here. And as we're coming up to that 63,457, you can see at least on the Bybit chart, it's right at the VWAP. So I'll delete this because this is distracting, but right at the VWAP, if we come up here and we see new shorts entering at this VWAP, that means that we could absolutely see an aggressive move down to take out our local lows from earlier today. But also I would expect it to potentially break our 1 month long range to the downside, this 1 month long range in here, to break to the downside, and I would probably expect to see our daily candle close below the value area low, and in that case we would be coming for some liquidity down at $62,200. Okay, so is it high probability that it's going down to 62,400? I can't. So Theo, I guess use your first name, Theo there. It's not high probability yet until we close the daily candle below the value area low of the range. And I understand you're saying, well, wait a second, that means we have to wait until the end of the trading day in order to see that. But it does matter because we do have local support here, especially that 786 Fibonacci. And if we do come and bounce from local support and then reclaim and close back inside of the value area low, there's a real chance the bulls could step in here and give us a push up all the way back up towards the value area high, or even at least to sweep some local liquidity around the POC before breaking it down. So that is not quite clear yet. What I will say as far as the money flow goes on the higher and intermediate timeframes, it does seem like we're about to break this down. It's not confirmed yet. And on the So like 8 hour, 12 hour daily, we're seeing some bearish money flow. But on the intermediate to lower time frames, we're seeing bullish divergences, meaning the bulls do have a chance to step in here and defend this local level of support. And if they can be successful with that, we could see a sweep up to sweep out some highs from earlier this week, and at the very least, make a decent move to the upside, like a scalp long opportunity to the upside. 1 hour time frame still looks corrective to too much overlap. Yeah, I would say so. If we're looking at the highs from 65.4, we did get our aggressive move to the downside, and now we are starting to see that selling exhaustion channel come in here. That is in some ways good to see that selling exhaustion channel form around the value area low of the range. And also with that selling exhaustion channel, we are seeing the bullish divergences being created between all the lows. Bullish div, bullish div, bullish div. You know, you can see all these. And in some ways that is a sign that the bulls could step in here and see a real reversal. And what you would expect, because you have that channel, because you have this selling exhausting channel in here, if you do see these bull divs play out, it's highly likely that we sweep the highs of the channel, meaning our double top highs around $64,500. Now, if we sweep them, there's a chance we sweep them and then just roll right back over. But if we don't see a liquidity grab, that probably means we're going to go come up and take out the high again from Sunday, which is a weekend high at 65.4. All right. Did you get in on Circle? We had some daily bull divs and held the value area low. Eric, I did not, but we will check Circle as well. I know that you guys asked about that in the Telegram the other day, so I'll check Circle. We'll go into all those altcoins in just a second here, guys. I'm waiting for hype to drop to around 45 before I'd like to take a long. Divine in BTC, you don't see a new higher high incoming because we made it all the way to the value area high, golden pocket weekly. So Jose, I described this earlier in the week and in the live stream on Tuesday in particular, But we were seeing from 67K, we were seeing clearly bearish money or bearish market structure, a low, lower high, lower low, lower high, lower low, right? And that means our bias locally had to be bearish. And also you can count this as a 5-wave expanding diagonal, right? A 1, 2, 3, 4, 5, a 5-wave expanding diagonal, which is a motive wave. It's a very rare motive wave, but because of Elliott waves, we look at probabilities. And even though it's a low probability, there is still a chance that this is a motive wave to the downside. Now, if this is a motive wave to the downside in a wave 1, where does your wave 2 commonly retrace to? Most commonly, it retraces to your golden pocket. And also with our volume level of resistance there, our time frame level of resistance there, and our liquidity level of resistance there, it was highly likely that if we were going to reject and roll over and see new lows come in, then that was the area. Now, the one thing that you could say that, okay, it's a little bit, if you want to give some hopium to the bears here, or to the bulls here, the one thing is we look at market structure, right? So we had market structure bearishly on the way down, low, lower high, lower low, lower high, lower low. Well, then within this move up, we started to change market structure bullishly. So we had to maintain a locally bullish bias until we got up to that major resistance. And then the big thing is we did grab liquidity and we did pierce above this lower high. So it is a market structure break. Now, it's not a daily candle close, and I understand some people that are market structure experts like to see a candle close above that high in order to call it a valid market structure break. But I, in my years of trading, have seen many times where you just SFP the high, you will make a higher low, and then you will make a higher high. So the one hopium for the bulls is that we saw a bullish market structure break by breaking that lower high at 65,360. Because we did break that high, it does give us a greater, not a guaranteed, but a greater probability of on the retracement putting in a higher low before making a higher high. It is really choppy, guys. It's really choppy right now, and we're in a sideways range, and we know that market makers like to play liquidity. The most important thing market makers go for is liquidity in sideways ranges. And the fact that this market structure break that we saw on a weekend was such a not a good market structure break. It was a liquidity grab, right? Just to stop out some traders, and we're in a sideways range. That makes it, for me, less probable of a true market structure break bullishly where we're going to put in a higher low and then a higher high, but it makes it more of a fake out, a weekend high fake out, where we were just grabbing out liquidity to stop out some of those traders that longed or shorted in this zone. We stop out those shorts, and now we continue the overall trend to the downside. But that's a good question. That is a good question, man. Yeah, and we are bouncing from the 786. We are making lower lows locally, though. You know, low, lower high, lower low, lower high, lower low, not lower low there, but yeah, we're making lower highs and lower lows within this move down, just like we were making higher highs and higher lows within this move up. And then if you want to look at the bigger market structure, bearish market structure here, and even in here, this is still maintaining bearish market structure by putting in a low, a lower high. So now are we going to see a lower low on the higher time frames? With the money flow leaving out of the assets on both Market Cipher and NAMI, and us rejecting from that key confluence of resistance, it does suggest that we could see another lower low below 62.2K. What do you use stock RSI for on CoinLace? That's stochastic RSI. And I look at bearish divergences as well. You can see here between the highs, we have higher highs in this corrective move. We have lower highs here. So we are seeing some bearish divergences on that stochastic RSI there on the 5-minute time frame. Now, I do have to say, I follow Coinbase charts the most because Coinbase, in my years of trading, Coinbase has the volume levels on Coinbase are far respected, more than Bybit, more than Binance, even though Binance has larger volume. Coinbase volume levels seem to be the most respected. It is the highest, the biggest US-based spot exchange, and really one of the biggest spot exchanges in the world now. So Coinbase is important, but, and we're rejecting from the Coinbase VWAP. But the Bybit VWAP, the Bybit chart is the second. If I'm going to look at one other chart, it's going to be that Bybit chart. And you can see that the Bybit VWAP is a little bit higher. And if we pull that golden pocket, you can see that golden pocket is going to be right where that VWAP is. And then if also we pull our 1-to-1 trend-based Fibonacci extinction, A, B, and then this is your C, your 1-to-1 is coming up into that same zone. And so our local resistance, our intraday scalp resistance right now is this zone right here. And what we want to look at if we're looking to take the short, because remember, throughout the day so far, we're making bearish market structure, right? Even from yesterday, we have a low, a lower high, just barely, but it is a lower high. And then we have another lower low. And then so if we put in a lower high, this would kind of be the area where I would expect it to be put in. And then you could see that true breakdown from the value area low. And so if we look at the Bybit value area low, it is just a bit lower, actually, yeah, a bit lower than the Coinbase value area low, but it is in real danger of being broken down. And the fact that we're already seeing some chop through it with like that big volume candle through it is a bit concerning to me. Mind Tapestry, much love to you, man. I hope you're doing well. Good afternoon to you as well. Good seeing the live stream. Just seeing it now. Was watching Jason Casper. Yeah, I was watching Jason earlier today as well. By the way, shout out to Jason Casper, you guys. I think he, on Tuesday, he announced that I was streaming right after him, and a lot of you guys came over here from Jason Casper's stream. You know, Jason's been a mentor and a friend of mine for going on 7 years now. The guy is just an incredible trader, an incredible human, and I just want to say shout out to Jason and shout out to all you in the Casper crew that have come join the live stream. And Mr. Rekachun, much love to you, man. We don't want selling exhaustion. We want the bear market to come to a close. The more we bounce, the lower we go. Yeah, so the more choppiness we see, it's like with anything, right? That coils up in a spring. When you see something coil tighter and tighter and tighter, generally when the move happens, it's an explosive move. So whether that's to the upside or you get that coil and then you explode to the downside, but the more small coiling and bounces and chop that we see, when that chop finally resolves, that's when you see a big move with follow through. And let's think in terms of the bear market. We know that a lot of the times in the bear market, we see kind of this big drop to the downside followed by this choppy range that happens. And then guess what? You get the big move to the downside followed by this choppy range that happens, big move to the downside. Now we're getting a choppy range in here. So just as far as bear market structure and the bear market in general, we would expect this to break to the downside, right? The big thing that is keeping me from that is we are at some major support. We're at that anchored VWAP from the bear market lows, at least on Coinbase, at least on the index chart. We're at the major pitchfork support levels. But yes, the more we chop in here, and that's hence the title of my stream today, guys. I said major moves coming soon for Bitcoin, because we really now are starting to chop and compress quite a bit in this zone. And when this zone finally gets realized, or what, you know, like matured, and we do see a resolution here, we're going to see follow through, whether it's to the upside or to the downside. And if we're looking at just our local market structure, we have to say that it is going to be to the downside, because we do have a low, lower high, lower low, lower high. It's only by a few $100s, but it is a lower high. So then maybe are we going to see a lower low? And I've been talking about two forms of accumulation happening right now within this bear market. And if we are seeing the bear market going to be ending in around, you know, September, October, November, that fourth quarter, Q4 of 2026, then what we want to see is we want to see some accumulation starting to form. And so there's two forms of accumulation we could see here. So first of all, within this little couple months of a move in here, we could see a Model 1 accumulation where we see a tap 1 in here, tap 2 here, and then if we get another lower low, that could be your tap 3, and then you would expect to get a break to the upside, maybe reject from your golden pocket 786 zone, and then we could get another move down, and hopefully for our bigger accumulation, we have a tap 1 in here. All of this is that tap 2, and then you get your tap 3, and if you look at down at the bottom of my chart, that could be the fourth quarter of 2026, depending on where that happens, where you could put in another bottom in a tap 2, which would be a higher low, or if it's another Model 1 following this selling exhaustion channel, then we would expect another lower low, and you could expect it around $56,000 or maybe even lower. This is something that I'm just watching for. I do like to watch these Wyckoff accumulation and distribution patterns. That's how I caught the all-time high at this cycle. We were seeing distribution right up in here. Also, at the beginning of 2025, if you go back and look at my YouTube channel, I made a video about this range, looking at accumulation, Model 1 and Model 2 distribution, or reaccumulation, and a lot of people were thinking this was reaccumulation. I posted in my video about how we were seeing bear divs form as the range was forming, money flow draining out as the range was forming, and it was far more likely to be a distribution that broke to the downside. And what we're seeing right now, we're not seeing it as clear as we saw the distribution up here, but we are seeing signs of accumulation where we're at right now in the bull market, right? Or in the bear market. We're seeing the bull divs, we're seeing money flow curve to the upside as this range is forming. And that does suggest that we could get that push up into the mid 70s or high 70s to create that one more larger range accumulation. Tap 1, tap 2, tap 3, right? Okay, enough time on Bitcoin. Let me just, before we move on to the altcoins, I know I have an alert set on that 618. It's going to be where the VWAP is. I'm going to be watching for a short there, but for now, we will go into some of the altcoins. And I want to be quick on some of the altcoins and on silver, everything that we're going to look at right now, because I have no idea how long this stream is going to last, if I'm going to get another power outage or not. All right. So let me scroll up in the chat. Let me see where those coins were. We had Near Protocol, so let's go to Near Protocol real quick. All right. Near. So the big thing with Near Protocol, I'm going to zoom out to the 4-hour chart. We did get a bounce from that naked monthly point of control. Now, the naked monthly point of control was only on the Binance chart. I'm going to hide this really quickly here. The naked monthly point of control was only on the Binance chart. So if I turn on that naked monthly point of control, we looked at this last week, if you guys remember, last week in the live streams. Naked monthly point of control was hit. We saw a bounce from that naked monthly point of control. But if I go to the same, well, the Coinbase chart, you can see there was no naked monthly point of control at that low. And for me, we have a weekly level, a naked daily point of control, and a 1-to-1 trend-based Fibonacci extinction at right around 150, 156, 150.60, 153.9. And I'm looking for potential, another low at that zone. Also looking to end this impulse down there. But we did get a reaction from our naked monthly point of control. And from that naked monthly point of control, we actually did break market structure bullishly by taking out a lower high, right? You can see right here, we took out that lower high, broke market structure bullishly. Now, because we did break market structure bullishly, there is a chance of putting in a higher low before making another higher high here. So let's look at what the options we have. First of all, the move down from 177 does look a bit impulsive. You got your 1, 2, 3, 4, 5. You have a 5-wave move to the downside. Okay, so if this was an impulse to the downside, what we're looking for is potentially an overall 3-wave corrective move up to make a lower high before dumping down and hitting that 150 level. So what we can do, and we also have a sideways range that's forming, and this sideways range is forming below our pitchfork midline, which was acting as major support prior. So we can pull the volume profile of that sideways range and look at the important volume levels. Well, where are we rejecting, guys? We're rejecting from the value area high, and we are losing the POC. So if we close today's daily candle below the POC after seeing 2 days in a row of rejecting the value area high, you might be expecting a move down to the value area low. But there is a possibility of seeing another move up first, and I want to explain that. So we had this being a potential, highly likely impulse to the downside. So now we can pull our Fibonacci golden pocket from the highs of the range or the highs of the impulse to the lows of the range or the lows of the impulse. Okay, where are we rejecting, guys? The most important thing, volume and your psychological Fibonacci golden pocket. And if you're looking for that overall 3-wave corrective move, You can also look at your 786 Fibonacci. And let me just zoom out to the daily real quick. I thought we had maybe it was a weekly level we had there. Nope. Was it a naked weekly? Let me grab our naked weekly points of controls. Not there, and maybe it was a naked daily. I thought we had something else at that 786. It might be on the Coinbase chart. Yes, there was a naked daily point of control on the Coinbase chart there. So if you look at that naked daily point of control, we still do have a fresh naked daily point of control just above us. And if we look at our volume of that sideways range, value area high, actually on Coinbase, it's very interesting. And let me hide this to get this out of the way for a second. On Coinbase, it's very interesting that we have the value area high and the naked daily just above us that have not been tapped yet. On the Binance chart, we did tap the value area high of the range, and we did tap the golden pocket. And of course, we tapped the golden pocket on Coinbase as well. Golden pocket rejecting from our zone. So our major zone of resistance was essentially this zone right here. And we're starting to see the rejection there. Now, the one possibility, because we did break market structure bullishly, and look at this, looks impulsive. There's no other way. There's no way to say that that's corrective, right? Volume increasing on the move to the upside. You broke market structure bullishly by taking out that lower high. So now we can look for another move, a corrective move. And if you're looking at this as an impulse and an A wave, well, this right now looks like a flat, right? An A, B, and then you would expect to drop down to take out the A wave lows. So you would expect to take out 161, but we could look potentially for a long from 161 off the SFP. And actually what I'll do right now is I will set an alert there, because we might be able to get, if this is going to be an ABC correction, we would be looking at a B flat. So this move up is clearly impulsive, an A wave. It broke market structure bullishly. If we get a sideways flat and a B wave, then there is the potential of seeing a C wave and coming up to around that 786, where it's around our pitchfork midline, right? You have your pitchfork midline, your 786 up just a little bit higher. And so we would essentially be looking for that ABC flat, A wave, sorry, not an ABC flat, but a B flat within an ABC, something like that. And then we might see the rejection down to 150. It could be that we're not going to see a flat in here in this little consolidation of the past couple days, but we had our move to the upside in an A wave, and we're going to come all the way back down to the golden pocket 786 in a B wave. And then we're going to see a C wave where we just barely take out the highs into our 0.65 golden pocket and our naked daily point of control. So we can also look at pulling a Fibonacci golden pocket 786 from the low to the high. And you can see that our golden pocket is right near our value area low. So all I'm trying to do right now is show potential scenarios as far as Elliott waves, and also show potential confluences of support and resistance. So now we know we have a naked daily that's just above us into this 0.65, and I would be interested in taking a short, because we have a double top here essentially. So if we do see another SFP, if we come down first though, you would want to come down first. If this is going to be a flat, then it's highly likely we're going to bust through it. But three potential trade setups. We can look for the flat within the B wave. That means we could get along from 161 if we break below it and then get back above it. We could look for a long to take out our local highs, and that would be something like you get the long trade from the reclaim. Your stop is probably going to go below wherever that wick ends, and you're targeting taking out the highs. That's a really nice scalp long trade on near. Another potential long trade on near is coming down to the golden pocket value area low. I would probably wait till we bounce from the value area low and start to reclaim the golden pocket. So your stop would go below the value area low, and essentially you would still be looking to take out those highs and potentially come up, your 786 pitchfork band area. But either way, you're looking at a really nice risk to reward ratio on along from there. And the reason why we're looking for another leg up potentially is because we broke market structure bullishly. So that means we could put in a higher low before making a higher high. And your value area low is down here as well. So you got some confluence. Let me see. Let's get rid of those. I do want to see if we have any confluence down here for, okay, naked daily. So this is going to be important for the flat scenario that I just explained in the B flat. We have a naked daily point of control at 160.5. So in the case of a long position on near, in this being a B flat, right, or a B wave with a flat in here, your flat targets are, if we take from this here and we put on our flat targets between the 1.236 and the 1.382, but the minimum target for a flat is to take out your A wave lows. So if we come down here, we take those out into the naked daily, I would be looking for a potential long if we bounce from the naked daily and then start to reclaim that low. That is when you could look for the long. Stop would go below that level and you'd be targeting the highs, right? So that's a nice little trade there. That's one potential. Now, overall on near protocol, I am still looking for continuation to the downside. But what's important for us as traders right now is to play this sideways range. So we play the range until it breaks. So you look for important zones for trades within the range. And that's all you pay attention to until you see a resolution of the range. Now, you could be looking for shorts with the bias of knowing that it's highly likely we come down to 150 or even down to 138, because 138 is our more macro golden pocket. 150 is some nice support, but our macro golden pocket is at 138 to 132. And let's zoom out onto the daily time frame. On the daily time frame, clearly, this is an impulsive move to the upside. Because this was an impulsive move to the upside, we could put in a higher low at the golden pocket before continuing a move up. So 138, with it being your previous range point of control, that is a more macro level that I'm looking for a potential swing long on at 138 to 133. Really closer to 133. It's like 135 to 133. You do have some bull divs. You do have some bull divs here. And yeah, I would say, I know that this is really messy chart right now. Let me just hide some of this. But you're starting to form that kind of exhaustive channel in here with bull divs on the chart. So if we see one more low into that naked daily and weekly, we could get a move up to take out the highs of the range at 176, and then you could see a move down to 138, or it could be the low at 150. But it's looking pretty nice. And also, as far as the larger moves go, look at this move to the upside. Look at the massive increase in volume here. Okay. Now, the entire move down that we've been seeing from 308, volume has been decreasing on this move to the downside, meaning that this is more likely to be a corrective move, more likely to make a higher low before busting up and coming up to maybe 356, 364, right? So that's why I will be looking for swing longs. We also have confirmation on the charts. 150, you can see I have alert set. I mean, we're ready to go at 150. And then as far as your local trades, you're just trading this range until you see a resolution of this range. Just like we were trading this sideways range until we saw a resolution of this range. Okay, I know I went a little bit long there. Let's go to hype. So on Hyperliquid, we pushed up new all-time highs, right? We're forming a range in this zone, and we still are in that range. But once we broke the value area low of the range to the downside, and we started to close a daily candle below it, let me get this cleaned up just a bit here. You can see once we broke the range down, we had a back test of the value area low, and once you rejected on the back test of the value area low, and I remember posting about this a week or so ago, we broke it down. We started closing daily candles below the value area low. We came up to bearishly backtest that value area low, which was a short opportunity to grab your lows. And I remember even when we were up here, I said, guys, it's highly likely we come down to $52. If you guys remember in the past few weeks, go back and watch some of those live streams. But now we did come down and we did grab liquidity from the range lows into a golden pocket that was front run. By the way, that golden pocket was front run on this low. So now we hit the golden pocket and we are seeing an attempt to get back inside the range, which is very, very nice because we're now, you know, yesterday we closed a daily candle back inside the range. If today is another bullish candle, we have a very high likelihood of moving up to the POC of the range. And we also had our A, B, C. If you pull that trend-based Fibonacci extinction target, your target around the 1.236 was right where we bounced. If you look at the 1.236, and I'll hide this golden pocket so that we can get rid of that alert, you can see that we bounced at that 1.236. It was also your golden pocket. It was also a liquidity grab. So major support in here. We're seeing a nice reaction. Now, the one thing we have to pay attention to is because we could still be looking at a bearish scenario. Instead of an A, B, C, we could be looking at a 1, 2, 3, 4, 5. Right? An impulse to the downside. So now we want to pay attention to, if we're looking at an impulse to the downside, we want to pay attention to this move up. We do not want this to be a low volume, 3-wave corrective move up and a rejection and then a fall over. Let's pull our trend-based Fibonacci extinction to see. So clearly this first move up is impulsive, followed by a corrective move coming up. So our resistance is between the 1-to-1 and the 1.236. All right. And so we have that 1.236 at a naked daily point of control and a daily level. You can see right in here. And the minimum target is the 0.618, which is going to be around your point of control. I think we're probably hitting that actually. Yeah, we're hitting that already. But let's also pull a Fibonacci wave 4 target, right? So if we're going for, if this is a wave 3 to the downside, then we want to go from the highs of 3 to the lows of 3, and you're putting on your wave 4 targets. Well, where are your wave 4 targets? We are now seeing nice confluence for potential rejections in a bearish scenario. So the one obviously is this purple box I already have laid out. It's your 0.5 wave 4 retracement. It's your 1.236 ABC target. It's a naked daily level. It's a daily level. And then the other local resistance above us is your 382 to your point of control. This guy and this guy are the big levels to watch in a bearish scenario of a 1, 2, 3, 4, 5 or a 1, 2, 3, 4, 5, right? You're looking at these two scenarios for rejections. On the other hand, we're back inside the volume profile, right? Let's think in terms of volume profile trading. We had a deviation into major support. We're getting back inside of it. Now, even if we do reject from the POC, your market structure locally is going to be bullish, higher lows and higher highs. If we do reject and come down and hold the value area low, that means we could be seeing a 5-wave impulse here, right? 1, 2, 3, 4, 5, some sort of contracting diagonal motive wave to start out. That is when we can start to get bullish for a move up towards the value area high of the range or towards a more macro golden pocket. You would want to look for a more macro golden pocket. You could even pull this golden pocket to from your highs to your lows. We would put that, make sure that's on log scale because that's more than a 30% drop. And you'd be looking at this $67 zone where we have a naked daily point of control as well. You also have a daily level in there. You can see that daily level. But yeah, and I would be looking up towards this zone if we break and start to close daily candles above this POC. So for now, we're just monitoring this local move to the upside. That's all we're doing. We're monitoring this local move. We had the long opportunity from our support level. Now we're looking at potential shorts in these two purple boxes. And if we do continue to drop down, if we do reject from one of these purple boxes, I would be looking for shorts to take out your lows. And honestly, you're probably going to fall to 44. It's the value area high of your previous range, and it's also a naked weekly point of control. And you can also pull a wave 5 target once we see the high being made on wave 4. Bullish scenario is we're looking at some sort of larger complex flat correction in here, and you're going to push up to make new all-time highs. Honestly, you know, you might see rejections along the way, but you're most likely going to be pushing up to take out your all-time high. So the fact that volume has been decreasing on most of this move down is not generally what you want to see for a wave, especially for a wave 3, right? First off, the wave 3 usually goes down to the 1.618. It usually continues down to the 1.618. You see a bounce, then a 4 backtest that value area low, and then you get the 5, right? The fact that we're ending a move down at the 1.236, which is also a golden pocket and grabbing liquidity of the range lows, volume decreasing on the move down, right? On our wave 3, you generally want to see volume increasing. Volume's decreasing here. So there is a real opportunity for the bulls that this is a larger 3-wave corrective move, and now we're going to see a new all-time highs being made. Not right away, you know, you will see pullbacks in that, but you would see some bullish momentum kick in. We did have multiple drives of bull div on NAMI as we were coming down here into this macro golden pocket. Money flows curving to the upside and crossing into the green. Look at this. 1, 2, 3, 4, 5, 6 drives of bull div on NAMI. Now, I understand that Market Cipher is not showing that. If we look at the 8-hour time frame, you did see nice drives of bull div coming in here. Yeah, from this low to this low, bull div, money flow starting to curve to the upside. Even local bull div on the 8-hour as you were coming down into that golden pocket. So we're just essentially watching. And today's daily candle close is going to be important because you can see right now we're breaking above, on today's candle, we're breaking above the value area low. But if we close today's daily candle back below that value area low, it is not a good sign. And essentially it's a liquidity grab and a shorter 3-wave corrective move because you can see we're grabbing liquidity from a high and now we're starting to dip. What we want to see is we want to see this essentially continue, right? Something like this, a push continuation. If you do get this liquidity grab, you want to hold and bounce from the value area low, which depending on what type of trading you're doing, guys, if you're doing scalp trading on this thing, you can actually look to long the value area low. If you have proper bull divs as you're coming down there, you'd want to look for 15-minute and under bull divs, maybe hour and under bull divs. But if we come down here and start to bounce, you can look for the long. You know, I'd put my stop. I would wait for a bit of a bounce first. You put your long wherever that wick is going to be, and I would be targeting that first big purple box of resistance up in this zone, you know. But that's more scalp trading. I don't like to do scalp, too many scalps on some of the altcoins, but that's available. Okay, let's go now to silver. So silver is coming up to our big resistance area. And remember last week we talked about silver, how we were looking at a potential impulse here. Wave 1, wave 2, a wave 3 brought us right up to that 1.618, and it's also your golden pocket. It's also a naked daily point of control. So we're coming up to that zone where we expect to see some sort of rejection and then a pullback in a wave 3, or a wave 4, excuse me. I have to re-pull this Fibonacci though, I believe. Nope, it's right. So we're going from low to high right there. And essentially you're looking, if you take a Fibonacci retracement from the lows of wave 3 to the highs of wave 3, you want to come back between the 382 or the 0.5 Fibonacci. We do have local support at each one of those. You can see we have some internal liquidity into our 382 and we have a daily level into our 0.5. As we were coming up to our big box of resistance, we were seeing bear divs forming on the chart. Higher highs in the price action, lower highs in the momentum waves, multiple drives of bear div on the 4-hour coming up into this resistance zone. But because we also have this very nice accumulation, tap 1 here, tap 2 here, tap 3 here, this is an accumulation range. You're breaking out of the accumulation range with volume, seeing continuation. You're in your expansion phase of a Wyckoff model accumulation, right? Model 2 accumulation. So we're looking essentially for this to continue pushing up. And above us, we do have now some internal liquidity into a value area low of your previous range. And we even have now a semi-equal double top up here. But for the next week or so, we might be seeing somewhat of a three-wave corrective move down to the 382, or you're going to see something like this, a move down, move up, a move down, right? Something like that. You're looking for your wave 4 to be similar in time and price to your wave 2. So we can say we're looking for a move down and sideways for about the next, for about 11 or 12 days. And it's only been, a day and a half, right? So maybe for the whole next week, we're going to be grinding down and sideways slowly. But I have alerts set on the 382. I will also set, we also have alerts set on the daily, and we're looking for potential longs from those zones. Let me see. What did you say about silver? Okay, let me scroll to the bottom of the chat here real quick, guys. Let me check BTC really quick as well. I know that a lot of you guys are here for BTC. So BTC, it looks like it's trying to come up to that zone of resistance. Man, the big thing though with this pullback real quick, and I know this is on the 15-minute or 12-minute, you don't really want to try to count with Elliott waves under the 12-minute because that's when it can get choppy. But this could be now 1, 2, 3, 4, 5. The one big thing I would say about that is your wave 3 didn't even make it to the 1-to-1, which generally it goes to the 1.618. But maybe we're even looking at a 1, 2, 1, 2, and then we're going to explode up in a 3 and then start to see some 4, 5s coming in. That's your bullish case scenario. But remember, our local resistance is just above us, 64.5. Crypto Clan World, much love to you, my friend. Welcome in. Darkspeed, thank you, man. Have a good one. Really quickly, guys, I do want to take a second to shout out the partners of the channel. So the main partner of the channel is BYDFI. They're a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description below, you can get a minimum of 20% discounts on your trading fees, and you can earn up to 40% discounts if you do deposit some larger amounts into the exchange. They're offering up to $8,100 in futures trading bonuses, depending on the amount of volume you trade on the USDT contract markets. So that's not only Bitcoin, but it's the altcoins. It's, gold against USDT. That's available, in my opinion. That's a great incentive to trade on the platform to earn that extra rewards. They're also offering some of the best initial deposit bonuses in the entire industry. Deposit $100, you can get 50% bonus. They're giving you 20% bonuses up to $1,000 deposit and 10% bonuses up to a $20,000 deposit. Now, I've also partnered with BYDFI to create that Telegram community where I do, it's a private community, but it's free. I try to keep you guys updated on Bitcoin throughout the day. I let you guys know all these alerts we set during these live streams. If an alert goes off and a trade presents itself, I try to let you guys know whether I'm entering the trade or not. So if you're interested in signing up to the Telegram, all you need to do is join BYDFI using my affiliate link in the description and deposit a minimum deposit of $100 or more. You can deposit more if you want to get some of the bigger bonuses, but a minimum deposit of $100. Once you've done that, you click the Telegram link, and in the Telegram Verify channel, you type in /verify and then your user ID for BYDFI, and that'll get you in. Your user ID is probably going to be a string of letters and numbers, but /verify and your user ID. The money you deposit in the exchange is your money. You're not paying it to me. You're not paying it to BYDFI. You're just depositing it on the exchange in hopes that you will try out the exchange, like the exchange, and stick with the exchange. I have a few other exchange partners, Blowfin, MEXC, and Bybit, all offering some various initial deposit bonuses and discounts. Links are in the description if you guys want to sign up for any of those. It is a way to support the channel. You can also just hit the like button, subscribe to the channel. And then lastly, I have NAMI, which is this momentum and money flow indicator you see at the bottom of your screen here. And I use this for confirmations to enter and exit trades. So like if we're looking at a certain resistance above us, as we're coming up into that resistance, I'll be looking for shorts, but I want to see bear divs forming as we're coming up into that area. And since I've been using NAMI for confirmation to enter and exit trades, it's gotten me into the good trades that are more likely to play out. And it's kept me out of some of the trades that are very less likely to play out because they don't have proper confirmation. And it's increased my profit margins. So if you're interested in purchasing NAMI, I've partnered with them to get you guys 50% off. All you have to do is click the affiliate link in the description, or rpink did post it in the chat. And when you're checking out on the website, use discount code DIVINE50 and you can get 50% off for the lifetime subscription to NAMI. If you want to try the month-long subscription, you can use Divine25, and I think it gets you 25% off the first month. All right, let's get back to the charts here. So for silver, I'm looking for local continuation to the upside, or continuation to the upside, but maybe a local pullback in the next week or so. We did have the bear divs that were coming up into this major box of resistance. You can see the multiple drives of bear div. If we go to the 8-hour chart, 8-hour has the wonky bear div, but this is bear div here. And we had bear div. Actually, that was invalidated, but money flow overall is curving down as well. So not saying a major pullback and crash. I mean, the big thing with when you have an accumulation range like this and you break out of it, on the back test, after rejecting from your macro resistance, you're looking for two things. You're looking for either a back test of the range highs, which the range highs happen to be right where your 382 is at. So you're either looking for a back test of the range highs, where you're going to flip those prior highs into support and continue up, or you're looking for a backtest of the value area high. Now, in that case, it would not be a good thing, because if we're looking at an impulse here, a 1, 2, 3, 4, 5, if you hit the golden pocket pulled from the lows of wave 3 to the highs of wave 3, if you hit that golden pocket, it is far more likely to be confirmed a 3-wave corrective move to the upside. And so what we would be looking at, guys, is if we do come down here and hit it, I'm not saying we're not going to get a long opportunity or a bounce, but you're probably going to get a bounce to make a lower high before now crashing down and changing market structure bearishly and making a lower low. All right, we did silver, we did hype. Let's see here, turbo. So, John, essentially, turbo's rejecting from our resistance. Trend base Fibonacci extinction, you had a 786, you had a weekly here. Rejecting, we wicked up to hit the 786, or not to hit the 786, but to hit our resistance box. We overall rejected from this golden pocket, and the golden pocket was pulled from the range highs. Oops, the range highs to the range lows. Hit that golden pocket. And that was on log scale. That golden pocket is on log scale, but it was also your 1-to-1 trend-based Fibonacci extinction. You wicked up to hit the 1.236 and to hit your box. I think there was probably a naked daily right here. Yeah, naked daily on the 8-hour, but on the 1 hour, it's probably up in that zone. No, there was something here. That's why that box is there. Maybe a daily level. Anyways, we rejected from resistance. And after rejecting from resistance, we're breaking market structure bearishly on the daily time frame. So you can see, first off, we're in this bottoming range. Now, we had the aggressive move down, John. This is kind of good for turbo, right? You had the aggressive move down, and now we're starting to chop sideways and down in a selling exhaustion channel. So we're starting to see our first signs of a potential bigger relief rally, but it's not there yet. And the fact that we rejected from a lower high, and now we're breaking market structure bearishly by taking out a higher low, right? Now we're breaking market structure bearishly here. It is more likely now that we are going to see this low be taken out, or at the very least, can we count an impulse here? Well, let's look at that. Let's zoom into the 4-hour chart. If we're looking at an impulse, it has to be a 5-wave move. First off, this first initial move, a 3-wave move there. followed by a pullback, followed by this, followed by another three-wave pullback, followed by this. So if we're looking at just the structure, 1, 2, 3, 4, 5. Okay, you have 5 waves. Can that be classified as a proper impulse, though? Well, right away I can say no because of this, but also your wave 3 cannot be the shortest wave in an Elliott wave. And if we're looking at your wave 3, it is the shortest. I can just tell by the eye, but this is 12.36%. If we're looking at this, 10%. And of course, your wave 5 is the largest wave. So we cannot classify that as a impulse to the upside. We have to classify this as some sort of larger corrective move in here, right? We would probably have to look at this as some sort of W, larger X, and then some sort of Y in here, or some sort of double zigzag to the upside. We're breaking market structure bearishly, so it is likely that we do come down and take out the lows. Now we can pull this volume profile of this sideways range. We're also breaking the value area low to the downside, bearishly backtesting it, and now making new lows. So it's the second you rejected here on the bearish backtest, you expected to take out that low from yesterday. We did. Or from earlier today. No, it was from yesterday. Let's pull our Fibonacci golden pocket. Yeah, you tried to see a bounce from the golden pocket yesterday just to reject the value area high, and now we're losing the golden pocket again. You do have some 786 support, which is going to be underneath this liquidity or right at that liquidity. So you might be able to get a scalp long opportunity off the SFP into the 786 here, but I personally am not going to be trading that on Turbo because it's too low liquidity. All these big wicks here, it's too low for me. You could get a scalp off of that, but if you even come down to the 786, I would be watching for another push up to see a higher time frame backtest of the value area low and then continuation. So if you're going to take a scalp long, I would at least take some profit at that value area low at 00804. But it's most likely we're going to see this continuation of this exhausting channel, and you're going to see new lows being made, and you're probably going to continue down to around that 007-ish. Seeing kind of this chop continue. Okay. Let's just do this 8 hour. You kind of see that chopping channel. You're at the midline right now, but you did reject from the top of the channel. So if you come down to the bottom of the channel, it's going to be at that 1.236. Okay. Yeah, absolutely, Jose. You're welcome on the silver analysis. I was going to do, let's see, Micron. We can do Micron. We've been looking at Micron in the past. There was another one that I was going to look at, though. Let me just scroll up in the chat here real quick, guys. If you posted an altcoin in the chat that I didn't cover, can you just repost it for me real quick, and I will do my best to look at that. Micron. Wow. Okay, so we were looking at Micron from, let me just zoom out to the daily real quick. Obviously, it's hyper bullish, right? And we were looking at an impulse from the lows at like $60. Well, we finished a nice 5-wave move to the upside, or what looks like to be finished. We could still see some more movement to the upside. But we 1, 2, 3, 4, 5. Now, if this is ending, if this is truly ending, you could see a big move, a 1, 2, 3, 4, 5, followed by a 3-wave corrective move, followed by another 1, 2, 3, 4, 5, all the way down towards your golden pocket. So in the very, very bearish scenario, you could come down to 194 or around $200, right? But in a more bullish scenario, because this is clearly hyper bullish. So remember, guys, the 0.382 In a hyper bullish move, it acts as strong support or strong resistance. So if we go from the low of the impulse to the high of the impulse, we put on our 382 in a strong trend, and we're going to make that based off log scale because that's more than a 100% move to the upside. Oh, I already have it on the chart. Your 382 is coming in around 397. Okay. 397 is also the value area of your previous range in here. We are seeing a bounce from your naked monthly point of control. We're bouncing from your naked monthly as support. And I will say this move down doesn't look too impulsive yet. Let me see if we can. I mean, you could still be looking at some sort of contracting diagonal, or actually you'd have to look at an expanding diagonal in here. But I honestly, the way this move looks with all this choppy overlap, you have your big initial move down, and then you start to get this choppy overlap in here. Like an expanding choppy overlap. You might continue this overall trend to the upside. You are bouncing from a naked monthly point of control here. The biggest thing to watch for is a rejection from the bearish backtest of this pitchfork midline. And if we pull a Fibonacci golden pocket from the highs to the lows, put it on our golden pocket. Yeah, your golden pocket's going to be right up around that pitchfork midline. Also, of all that choppiness, you have the start of that choppiness, the liquidity, the start of all this choppiness in here, that liquidity resting right up into that golden pocket. So around 1,057 to 1,074, I would really be looking for an SFP of this high into that, because you still might be seeing some sort of bigger move to the downside. And if this is going to be a wave one, you want to see your wave two come up towards that golden pocket, then you would expect to see, that big 3, 4, 5, something like that. You'd like to see an impulse down here. We did have some pretty bad bear divs as we were coming up into the highs. Multiple drives of bear div on the daily time frame. Money flow is now seeing that drain out. But on the other hand, remember, in a super bullish trend, you pay attention to bullish divergences as well. And as we were coming down to the naked monthly point of control, lower lows in the price action, higher lows in the momentum waves, you had some bull divs. Now, Nami had some before we got down to that major low. Yeah, Market Cipher showing bull divs, and if you look at Market Cipher, money flow is now curving back up. And because this looks corrective, that means you would expect not to reject from your golden pocket. You would expect to continue to break the highs. Yeah, this thing is just hyper bullish here. Even on the weekly time frame, money flow is looking like it wants to curve back up. The one thing I would say with Micron, be careful. Nothing can go straight up like this forever, right? Nothing can go straight up. And it does look like your move is done. It does look like this impulse has a nice clean 5 waves now. So maybe we're going to see some sort of double top up there. In a hyper bullish scenario, you could pump up to the pitchfork, 4,800. That's so far away though, guys. I wouldn't even be thinking about that quite yet. Now, as far as day trading this thing goes, just pay attention to your range. You can see that we kind of have a sideways range developing in here. So you can pull the volume profile of that sideways range. Yeah, looks like your resistance is definitely going to be, your local resistance is definitely going to be that, swing failure pattern into your golden pocket and your value area high. You're probably going to have some sort of naked weekly or naked daily up there as well. Yeah, you also have a naked weekly point of control up there. So definitely your big level of resistance is going to be around 1,050, right? That's where your naked weekly, your golden pocket, your value area high, volume resistance, Fibonacci resistance, and liquidity resistance up there. It does look like you could be forming some bear divs as you come up there as well. Man, Micron is super bullish though. Like these moves down, look at how quickly you develop the bull divs on this thing. If you break above this purple box of resistance, you're very likely to take out the highs. Man, and honestly, like the way to count this is, let's see, 1, 2, 1, 2. You'd have to even say another 1, 2 because there's overlap. Yeah, it's very, very hard to count an impulse in this move down. And because you can't clearly count an impulse here, you're looking to take out those highs. If we change market structure, right? So far, we have local high, your high, higher low, higher high, higher low, higher high. But you really want to take out this guy in order to see a nice bullish market structure break. Oh, that's right. Circle was what we were looking at. Let's see. Oh. Circle's coming up to that resistance that we looked at last week, or was it on Tuesday? I think we looked at this resistance maybe last week because, yeah. But you had this small range into your value area low. And Eric, I think you said you bought some in the Telegram, but we did have very nice bull divs. Look at these bull divs coming into that money flow coming to the upside as you were coming into your macro value area low. So we're looking at this larger sideways range. You have kind of a range, and I get that this, this is kind of a range you can see in here. You kind of have a range in here, and now you have this range down here. So we're paying attention overall to this bottom range, this bottoming range here. And then within this bigger bottoming range, we were paying attention to this small range that was starting to develop. But as you were coming down into that support zone, and I think that was our $786. We'll put that on log scale. Okay, let's see if we hit the 886, because this is going to matter. If we did hit the 886, we did not hit the 886. Okay, that's a good sign, because if you hit the 886 in a larger downtrend, and I'm going to have to zoom out to the daily real quick. So clearly we're in a larger downtrend, making, lower highs and lower lows, right? If you hit that 886 in a larger downtrend, then you would have to classify this as a 3-wave corrective move, and you're likely to take out this low, which is still a possibility, by the way. It is still a possibility. But that doesn't mean you're not going to see a bounce from the value area low. That means you could make a lower high at the value area high and then see a lower low. But we're just playing this sideways range. So you have some resistance coming up. Our first box of resistance is the golden pocket, a naked daily point of control, along with the liquidity grab. Coming up into that right now, maybe going to hit it tomorrow. And then the next zone of resistance would be the 786 Fibonacci into the point of control. And I understand that's pretty close to this resistance, but you have to pay attention to it. And then if you break above that, there's nothing really until you get up to this zone up here. Yeah. This naked monthly is very interesting because it's going to be around your anchored VWAP. By the time you get up there, that anchored VWAP is going to be coming down, and it's going to be in the zone between the 786 and the naked monthly. So with that volume-based trend resistance, I would definitely be watching that because this anchored VWAP rejection, even if you come up again, you could see a rejection there. Now that's much higher time frames, right? We're not going to blast straight up there. You're going to see rejections along the way. I would expect to see like a wave 1, pull back in a wave 2 to back test the value area low here. Wave 3 could probably bring you up towards your naked monthly 7. Actually, I would be looking at maybe something like a 1, 2, 3, or something like that, 5. And if you see an impulse there, you could reject there. See pullback. That's speculating a lot into the future. We're going to have to see how it develops. But right now, Circle is breaking out of this smaller range. We had bull divs on the chart. Nice bull divs on the chart developing within this chop. Sideways, big aggressive move down, followed by that choppiness into your value area low. Bull divs on the chart. Look at these bull divs on the chart. I mean, massive, nice bull divs here on Circle on the daily time frame. Multiple drives. Let's see if we have weekly bull divs. We have some kind of wonky weekly bull divs on the chart for NAMI, but Market Cipher, it's just not enough time yet to develop those weekly bull divs. Essentially, though, you're coming up to your first big local resistance. So watch that SFP into that golden pocket at $76 to $77. Actually, $76 to $78 is going to be your big zone. If you break above that, I would really be watching the POC at like 82.5. Now, another thing I want to look at here. Oh, actually, that's a higher high. Okay, so as far as the impulse down goes, you'd have to say, you know, you got a bunch of 1-2s in here. 1, 2, 1, 2, 1, 2. This is your 3. Maybe this is a 4, 5, 4, 5, 4, 5, something like that. You'd have to, that's going to be really messy to count, but essentially you're seeing this impulse coming to an end. You've broken market structure bullishly by taking out these lower highs in here. You're breaking market structure bullishly. So that's a good sign as far as a bigger move to the upside. You have your first big market structure break. That means even if we do reject from this zone, you could put in a higher low before continuing up. And with the daily bull divs that we're seeing on the chart, you should be looking for longs in this, you know, on pullbacks. Not should be, not financial advice. I'm not a financial advisor, but you guys get the point. So awesome, Eric. I know you said you bought some down here. That's really awesome, man. It looks like you got some good spot buys on Circle. And you could take this thing all the way up to the $100 mark, $102, $100 mark here. Okay, we'll do gold real quick. Let me check Bitcoin before we do anything else. Is she doing nothing? Wow, we're starting to see a rejection from that VWAP. So let's talk about a local bullish scenario. The only local bullish scenario we'd have to look at is a 1, 2, 1, 2, something like that. And then you're going to explode up into 3. And then you're going to start to see your 4, 5s coming in. So we would have to pull a Fibonacci, a local Fibonacci golden pocket from the lows of this move to the highs here. And we would look at your golden pocket, which is going to be right on top of the value area low. And let's think in terms, not in terms of Elliott waves, but let's think in terms of volume profile trading. Earlier today, we lost the value area low, but we were able to get back inside of it. So now if you come back for a bullish back test and you bounce there, you're expecting to take out your local high and you're expecting to continue to move up. So now in a bullish scenario, now this is not my highest likelihood scenario, guys, but if you're a bull on Bitcoin, and you missed the 786 long today, you could look for a long from this golden pocket at 63,190, let's say 63,190-ish to 63,178. What you would want to look at is I would first personally want to see this come down, and I would wait for it to bounce a little bit, and I would get in after the bounce starts. I would be putting my stop below the golden pocket, and I would be targeting simply just the highs for now. That's still a nice scalp trade. But if you're expecting a wave 3, then you're expecting this thing to break up like pretty aggressively, right? So you'd be expecting to break this local golden pocket and 1-to-1 resistance. You'd want to see like a 1-2, 1-2, and then this you would want to continue. And honestly, you'd probably want it to continue to take out both of these highs. Maybe your wave 3 is going to break both those highs, take it out, see a 4, and then a 5, and then another 4, flipping that POC to support, and then another 5, right? You have your chop at the beginning, you have your chop at the end. That's the bullish scenario. So what I will do is I will set a local alert on the 618. And if we come down here, by the way, if we're coming down here, because very clearly this could be a 3-wave corrective move, and this is going to bust straight through that golden pocket, and we're going to make new local lows. That's the higher probability. In my opinion, guys, the higher probability is that we were going to reject from this general zone and roll over to make new lows based off money flow and things like that. But we still, as traders, have to keep in mind, we trade against our own bias, right? So in the bullish case scenario, this is the support level. Now we want to look for some sort of long position if you didn't get in from the 786 earlier today. So yeah, you just have to be very, very careful because we do see a very clean 3-wave corrective move rejecting from the VWAP right now. So this could slice straight through it. So I'm not setting alert long positions here or limit long positions here. And as we're coming down here, you kind of want to see that be a 3-wave corrective move. And you want to see some bull divs between these lows and the new low. So you'd have to go in on like the 5-minute and under. 5-minute, 12-minute. Yeah, you'd want to see some bull divs right now. I mean, obviously they're not happening right now, but we're still not down there yet. USDT looks like it wants to pump as well. I mean, to me, guys, it just looks like with losing the POC and rejection, it looks like we want to break this down. Okay, we did gold USDT dominance. I'll check the USDT dominance chart here. Yeah, look at this though. This is what's scary about USDT dominance. We're trading within a range right now, a sideways range. We came down to the value area low, we bounced. It looks like we're trying to break above the POC right now. We still haven't had a nice break above, but if we start to really, like, one more 4-hour candle close above that POC, it's likely that we do move up towards that value area high. You know, you're bouncing from the value area low. You're likely to move up towards the value area high, sweeping out all of this liquidity and coming right into this liquidity right here. Actually, this looks like a really nice impulse if we're looking at a 1, 2, 3, 4, and then you have a contracting diagonal in a wave 5. 1, 2, 3, 4, 5. And remember, these are motive waves. You're looking for 5. So to see a expanding diagonal or a contracting diagonal towards the end, it's not rare, and that is a valid count there. 1, 2, 3, 4, and all of this in here is your 5th wave. Now, if that's the case, if this first initial move down is an impulse, then you're looking for a larger 3-wave corrective move to make a lower high before making another lower low. So we can pull our golden pocket from the start of the impulse to the end of the impulse. You're going to be looking, let me see if that's, okay, that's only 12%, so we'll make sure that's not. Yeah, you're going to be looking for a move up towards your golden pocket 786. But the big thing, especially with USDT dominance, is the equilibrium, your 0.5, which is that equilibrium. It's going to be right at your value area high and with liquidity there. No naked points of control, though, in this zone. But yeah, I guess it's all going to depend on how we close today's daily candle. If you want to, in the bearish case scenario, we're going to close this above the POC because you can see here for the past couple of days, we bounced over the weekend from the value area low. It was also the back test of your larger range value area high. And that's important. You guys can see here, push up, back test value area high. Actually, we back tested it here, made new highs. Now we're coming in for a higher time frame back test. If we hold it, you expect overall to make new highs. The thing is, this might expand a little bit further, and you might take out the double bottom first before coming up there. Because this has the potential to be an impulse. Impulse correction, impulse down, maybe another, take out the double bottom. Remember, that is a double bottom down there. Technically, it's a liquidity grab, but it's just barely. But you can see the POC, this range in particular is what we need to pay attention to. And for the past couple of days, we've been trying to break above. If we close today above, it's pretty much confirming we're breaking above it. That's also going to be around your golden pocket. Yeah, we actually have been hitting up against the golden pocket too, so it does look kind of bullish. I hate to say this, but it does look like it's kind of bullish on USDT dominance. Because we already technically hit the golden pocket earlier this week on Tuesday. You saw a small pullback, got some local liquidity. Now, if we do something like this, hold it and break through it, that's going to be a sign that we're at least probably moving up to here. And that means Bitcoin's going to see that bigger dump. Larger structure like a cup and handle. Okay, let me see here. Oh, I think I see what you mean. Like this is your cup and this is your handle in here. And then that could break up. Yeah, I mean, it could. What we were looking at overall from the lows is we were looking at a impulse to the upside. In the same thing, you have the nice accumulation range in here. You can see this accumulation range. Tap 1, tap 2, tap 3. You get your expansion forming. The big thing is if we're looking at this as a 1, 2, all of this, this could be your 3, or you could still be in your 3. You would have to count all the subwaves in here, right? But if we look at our trend-based Fibonacci extinction, and we look at our 1.618, we're finally hitting the 1.618 in the last couple of weeks here. So this is likely to be the end of the third wave. Maybe we're going to see a pullback. So you're essentially looking at this, a 1, 2, 3, a pullback. And remember, your higher degree wave 4 often pulls back to the termination point of a lower degree wave 4. Now that means this is also a lower degree wave 4, so it could just pull back to there and then come up. But yeah, it's overall looking pretty bullish. I just think that we're gonna likely to take out these the double top highs. It's so close to us. But because we're rejecting from the 1.618, we might see a little bit of a move down for a few weeks before coming up. It's all going to depend on what happens locally in this range. If we break above the POC, you're at least going to see a move up towards the value area high. I will say this. I mean, you are attempting to break up here. You do have some green dots on the daily, but money flow doesn't look the best. 3-day, excuse me. That's the 3-day. Let me go to the daily. Yeah, we don't have bull divs, actually, so that's somewhat good that you don't have bull divs, meaning that we have our aggressive move down here, and then we're kind of going sideways in this range, right? This is the range. So yes, it's still very possible you could move up to the value area high, but it's because of the lack of bull divs, it's likely you're going to take out this high right away. You would maybe see something like this, and then a move down to take out the double bottom lows. Looks like a slanted head and shoulders. Are you talking about on some of the higher time frames? Yeah, like this left shoulder, head, and then maybe if we get this to break down, you would get a right, and yeah, that's that slanted neckline, left shoulder, head, right shoulder. In that case, I would be looking more at a Model 1 distribution where you have your exhaustion channel in here. And I would be looking at this as a tap 1, a tap 2. I'd be looking to come down and then looking to come up to make one more high and a tap 3. And that would give you that kind of sideways exhaustion, buying exhaustion channel up here. Oil, yeah. Is it U.S. oil is the one you're looking at? Dang, I mean, we said two things, and I remember talking to you guys about how this looked like it was a bunch of 1-2s building up in here, right? You have your kind of choppiness in here. You get your big aggressive move down. Now, the big thing is, though, you wanted to see some 4-5s coming in here. And that would have finished an impulse. Choppiness here, big move down, choppiness here. We didn't see that. And this move up was pretty aggressive. It still could be, let's see, that high is higher than that high. The only way to count this as some sort of motive wave is you would have to look at this as some sort of contracting diagonal in here. 1, 2, 3, 4, 5 contracting diagonal. And then you would want to move up towards your golden pocket. And then now you'd want to see a big move down here. The fact that we came up so high here is kind of bearish for continuation to the downside, like massive continuation to the downside. But this is our range, essentially. And you got back into the range, but you lost it immediately, bearishly backtested it, made new lows, bearishly backtesting, and you're rejecting right now. So because you're rejecting right now, you would expect to make new lows again. I don't know why the US oil chart does this, but you can't analyze volume on the larger time frames or larger ranges. CL oil. I don't know if I've ever looked at that chart. Yeah, if oil crashes, that is going to be good for Bitcoin and for some of the other coins. Man, this thing just chopping sideways this entire range. I just want to see if we can even pull a volume profile here. Oh, it does. It works. Okay. Well, we bounced from the value area low. We were able to reclaim or hold it, push up to the value area high. We rejected. We're coming down to the PLC, but we're seeing a bounce from the PLC on the monthly time frame. And at the very least, because we did break market structure bullishly by taking out this, that's a bullish market structure break on the monthly time frame. And actually all of this is too, right? Bullish market structure breaks, but that was your big pivot. It's likely you could put in a higher low before making a higher high, and you would expect to take out this liquidity, essentially. Let me mark out that. You've got the same sort of choppiness, though, in crude oil in here that you do on US oil. So all this kind of choppy overlap in here, and then a big move down. Now, these do look like 1-2s to me, right? Those look like a bunch of 1-2s. This looks like a 3, but the fact that you're coming up and hitting your golden pocket, if you pull a golden pocket from that last high to low, you're hitting, actually, you haven't hit the golden pocket yet, so you haven't invalidated an impulse down because you have to pull it from the start. So if this is a 1-2, 1-2, and then this is your 3 in here, let's see, let me go zoom in. Yeah, you could be looking at this as a 1-2, 1-2, maybe another 1-2 in here, and then this would be a 3. But you haven't hit the golden pocket yet. So because you haven't hit the golden pocket, you haven't invalidated an impulse yet. So this could be a 4. You'd be expecting a 5 and another some more 4-5s to be coming in. If you do hit that golden pocket at 94, then it's going to invalidate it, right? And that would mean that this is more likely to be a corrective structure, and you're likely to continue up to make new highs. Let's just talk about from this high here. Clearly, we're seeing some choppy overlap in the move down. So if this is a wave 4 retracement, then you got to look at this as a 1-2, 1-2, because there's overlap between these lows and these highs here. And then you would want to see oil break down in a wave 3, and then you would see some 4-5s coming in, coming towards the value area low, probably. But let's pull this price action above the POC when you broke above it and then back tested it. Yeah, coming up, I mean, clearly this is our big resistance above, right? Clearly, that's a market structure break. Let's just delete that real quick. Okay, no naked weeklies up there. But look at, you have your value area high resistance, a POC, a naked monthly POC, a golden pocket. So definitely your giant zone of resistance is this guy right here. You also have the value area high at the monthly above, and some liquidity up there. So those are our zones to pay attention to. Kind of this zone and then this zone. 97 and then 106, 105. 94 to 97 and then 105. But overall, on the higher time frames, you have obviously your big range, and you're bouncing from the value area low. You tried to break out of the value area high, and this is somewhat of a failed auction breakout, right? Because you were attempting, and then you fell back inside. So now if you do come up and you reject from this purple box, you're going to expect continuation down. In the rejection, you would want to see this be impulsive here, corrective here, and then another impulse up here. A 3-wave corrective move, and then you would want to continue down. Now, if you hit that golden pocket, once again, if you hit that $94 golden pocket, you're going to have to rework the way you're counting your Elliott waves, because you have so much choppy overlap in here. And then clearly this is your big move down. But if you come up that high, you cannot say it's all part of the same impulse. You would have to look at this move as separate from this move. Man, this is a bit of a tough one, to be honest here, because even in some ways, let's turn on our volume here. Even in some ways, your move to the upside here, volume is increasing on that move to the upside. And then on the move to the downside, volume is decreasing. The big support level right now for crude oil is just going to simply be your point of control in your monthly level. And I believe we had a naked weekly down there as well. Yeah, you have a naked weekly down there in that relative zone as well. Resistance above us, support below us. And then we can even look at pulling. Okay, your golden pocket, you're seeing a bit of a bust through it, and then a rejection here on this value area low back test. That means we could see a move down here, and then like your 786 is going to be just above that, but I wouldn't be paying so much attention to the 786 as that naked weekly point of control and your range point of control. So yeah, the green box. And this is a bit tough of a range. This one's a bit tough to trade because of the choppiness in here. We don't have a real clear impulse to the downside. But once again, after the choppiness, you got that aggressive move down. And technically, we have not hit the golden pocket yet. So this could still be a wave 4. And then you would want to see a wave 5, and then a 4, and a 5, and a 4, and a 5. If you have a few 1-2s in here, you would want to see some 4-5s coming in. Okay, let me check Bitcoin really quickly here, guys, and then I do got to get going. Please do hit the like button if you did get any sort of insight into the market from this live stream. I will be live streaming tomorrow as well at 3 p.m. Eastern Standard Time. And guys, we're just going to have to manage. Obviously, Bitcoin's been really boring. I do think a big move is coming soon for Bitcoin, but we're going to have to manage our trades, kind of switch into scalping mode, because right now it's in consolidation. But remember, the big thing with scalping is you're more likely to get stopped out because your stop losses are so tight. So you have to use good risk management. But also, if you enter a scalp trade, let's say that we're scalp shorting this golden pocket just above us. Where is it? Did I delete them? Let's say we're going to short this golden pocket just above us here, right? And then we're targeting those lows. Our stop is going to be above that golden pocket or above wherever the wick rejects us from. Let's say you get into this short trade and the volatility kicks in and we break out and we continue to break out, and you shorted here with a very tight stop loss. If you're not using proper risk management, or if you didn't set a stop loss, or if you're risking like 20% of your portfolio here, if the volatility kicks in, you can lose very, very quickly. So the big thing with scalp trading is it's a lot more taxing, and you have to pay a lot more attention in order to get those proper wins and use just risk management is the most important thing, guys. I'll harp on it over and over and over in my channel. The most important thing is risk management. You can actually lose 70% of your trades and only win 30%. As long as you're taking 1 to 3 risk to reward ratio trades, you can still be profitable if you lose 70% and only win 30%. But the big thing is making sure you have a plan ahead of time and a proper stop loss, and you're calculating your position size based off that stop loss. And if you're scalping these low volume moves or low price action moves, right? Just something, moves like that, a few $100s or so. If you're right, great, you're making good money. If you're wrong and you're not using proper risk management, that is when you can wreck months and months of profit, or you can just ruin your entire portfolio. So you have to be careful there. But I will do my best to keep you guys updated in the Telegram. Remember, if you do want to join the Telegram, all you have to do is join BYDFI using my affiliate link in the description below, and then deposit a minimum deposit of $100 or more. You can deposit more if you want some of the bigger bonuses. Once you've done that, you click the Telegram link and you type in /verify and then your user ID, and it will get you into the Telegram. And when I'm not streaming and when I'm not making videos, I try to keep you guys updated on Bitcoin in the Telegram and any trades that we set alerts on, or any possible altcoin trade setups that I'm looking at if I decide to enter the trade, or even if I don't decide to, and I'll come in and tell you guys, hey guys, it's coming down to support or up to resistance, but I'm not entering here. So if you want those alerts, if you want those, I don't want to say signals because they're not signals. If you want those notifications from me, just make sure you get into the Telegram. It's free for you guys. You guys get discounts on trading fees. You can get bonuses, and all you have to do is deposit money into the exchange and trade on the exchange, and it's your money. You're making the profits, so I think it's a win-win for everyone. I try to keep it fair, open, and transparent. But if you're interested, links are in the description, and thank you guys so much. Looks like we made it through the live stream without a power cuttage. I will see you guys tomorrow at 3 p.m. Eastern Standard Time. Unless you're in the Telegram, I'll try to keep you guys updated there. Much love to you all.